Hey traders, John Howell here today. I want to talk to you about the big fundamental reasons why the stock market is starting to make a big move to the upside and what's likely to happen moving forward through the rest of the months and why this is actually happening and why most people are focusing on the wrong things when it comes to today's market, because we are in a different environment than we were just even a few years ago. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into today's training. Right now I'm gonna be talking about the big fundamental reasons why we are doing what we're doing right now in the stock market and what we could expect from that thing that's happening, the big fundamental reasons of what's pushing these markets around. But this is not based on, using a strategy, right? If you want to use a strategy, join my webinar and link in the description, and I'll teach you all the details of how I trade the markets. But this is a bit different. This is more about looking at the big picture of why the market is doing what it's doing and what we could expect. Okay, so, and the reason why I'm doing this video is because I've been seeing a lot of people continuing to try to short this market. They are, firstly, if you are shorting a big booming bull market, I hope the lessons that you're learning right now via losing money will teach you. And guys, I'm not speaking at you, I'm speaking with you. I've done this so many times where we have a big booming bull market. I would listen to these bumblebees out there. I call them bumblebees. That's not an offensive term. That's more like just saying, okay, instead of me going along with what I know about what's happening in the markets, I would listen to all these other people out there. Okay. So, I'd listen to all these people that are saying the stock market's so overvalued. We haven't been this high ever. The stock market is so overstretched. Even Michael Burry's calling the stock market crash. Harry Dent, well, who cares about Harry? He's been calling it for the last 20 years. I think he's got it right once, hasn't he? 2008. Oh, poor Harry. The thing about Harry Dent, guys, and I like Harry. I think Harry's awesome. But the thing about Harry is that he's so stuck in his own ways about these markets that he's completely missing the big fundamental reasons. Like, even read Ray Dalio stuff. Ray Dalio's the man. Right, if you're going to be looking to anyone about these markets, Ray Dalio is the man. So if you're looking at the big fundamental reasons and what's happening behind the markets and what's pushing these markets around and so on and so forth, he's the man. And that's the unfortunate thing about Harry Dent, is that Harry Dent has continued to push what he's thought about these markets and not really understand where we are in the cycle of things. And it's one of the reasons why Ray Dalio is so successful, right? Is because he understands where we were and where we are. So I want to talk to you about where we are right now in the markets. And the one thing that is really, really, really important to understand is that, yes, we are in a big booming bull market. The thing is, like, we never know, the whole trend is your friend until the end, right? You look at the Nasdaq, right? You look at the S&P 500. Let's actually just bring up a blank chart. Right, you look at the Nasdaq, you look at the S&P 500, and if I bring up a good old weekly chart and I look at the last 12 months, the markets continue to make higher lows all the way up. So it's very, very, and every single time the market crashes, oh my goodness, the market's going to crash, new high, market's going to crash, new high, market's going to crash, new high. So the market's going to crash, the market's going to crash, the market's going to crash, right? So firstly, on a technical level, if the market is continuing to be in a very strong upward trend, then don't fight that upward trend. Even on the S&P 500, that big picture, look at this back here, right? Low, higher low, higher low, higher low, higher low, higher low. And this time here, guess what? We just had a bit of a pullback, and now we're almost about to break to a new high. So the thing is that as a lot of people right now are trying to short the market, a lot of people are going to get wiped out right now because they are, unfortunately, they are looking at people like even Michael Burry, right? I think Michael Burry is such a smart guy. But the thing you must understand about Michael Burry, and the thing you must understand about his big short position, again, guys, this is based on the big fundamental reasons behind these markets, okay? If you really want to learn its trading strategy and also what goes into you being a good trader of the markets, if you're looking to generate income, then join my webinar link below. But if you look at Michael Burry, Even his big short position, how he made a lot of money. Guess what? Wasn't it 2005 that he actually started putting that position on? His first position wasn't 2005. Then guess what? Wasn't it 2007? And then into 2008, that's when he got the big payday. So the thing is, we never know how much this is going to stretch. And so I've just been seeing a lot of people, one, shorting this market. And secondly, I've been seeing a lot of people that are listening to these people out there of saying how the inflation is going to kill the markets or whatever, right? Or Schiff says this, or Harry says this, or Michael Burry says this, and so on and so forth. So, and then we think about the bad news about what's happening in China. Oh my goodness, the China market's gonna fall, and that's it. Here we go. It's the first domino. Then it's gonna come to America, and it's gonna knock it over. And we come up with all these rhyme of reasons, but we're forgetting just one big fundamental reasons why the market's doing what it's doing right now. The market right now is on such a high of liquidity, and it's continuing to happen from a few sources. The first thing is that 0% interest rates is a flaw underneath these markets. They haven't even started to just even touch on those breaks. So even on a short-term pullback, why do you think we're going to see that? Okay. Secondly, is that they haven't even started to taper yet. They haven't actually started to taper their bond purchases yet. That's keeping a floor underneath these markets. Again, doesn't mean we're not going to get our pullbacks. We do get our pullbacks, but an overall swing to the upside. But then if you understand the big macro of where we are right now, this is the reason why I've been calling a 5,000, potentially even 5,400 on the S&P and a 17,000 print. All right, I see a 17,000 print, which is actually not that high anymore, but actually right up there, right? So I'm calling a 17,000 print on the Nasdaq by the end of this year. But here's the thing, guys. The reason why I've done that for you guys, if you look at my trailer video on my YouTube, I've had that pretty much for the majority of this year for those targets. And so the reason why I still say that is because if you understand what's happening right now, this is very, very similar to 1929, but times 10, and we've actually thrown a rocket in there as well too. Let me explain. Back in 1929, we didn't have 0% interest rates, and we didn't have a lot of the printing of trillions and trillions and trillions of dollars, right? What was happening back in 1929, and why do we have the stock market 1929 crash? The reason why is because the Fed created a situation where there was no other game in town at that time, so therefore all this liquidity started coming to the stock market. So if we look at what's happening right now, there is a few things. Firstly, they haven't actually started touching the interest rates yet. They're still doing their bond purchases every single month, okay? And then guess what? And they've put in so much liquidity into these markets, and they're going to do even more QE moving forward, okay? Now again, guys, this doesn't mean we're not going to see corrections or pullbacks in the markets. We can, but this is the reason why I'm seeing a lot more upside to come overall. And we may have even started that whole Santa Claus rally thing, right? We may have even started that. But then if you look on the other side as well too, of these markets, if you look at the big guys out there, know that having money in cash right now is getting wiped away with inflation. And then also having bonds, which is going to give you a negative yield, is also, the bond market is the biggest market out there, right? The debt market. So what's happening? All this liquidity is on the sidelines getting flushed into, guess where? Real estate and the stock market. Now, my question to you is, has anything changed yet? No. So why would it change? We haven't even started to slowly put on the brakes. The first sign of brake pudding, there you go guys, brake pudding. The first sign of this slowing down would be tapering, first sign. Secondly, will be just slightly putting the interest rates up. That's a slight little touching on the brakes. And so right now there is so much liquidity on the sidelines that's been here for the entire year. And now guess what's happening? Woof. And we're seeing this very, very strongly, even with comes like the S&P, even the Dow. The Dow's come rallied right out. The S&P is the big one, right? Just come rallied right out, and we're almost at all-time new highs. And so, as you guys know, I've been calling for a massive boom towards the end of this year. And this is the reasons why, guys, because there is massive flaw underneath these markets. Yes, there will come a time when we see this incredible crash, but we're not done yet because they haven't even started putting on the brakes. The market will go and go and go and go. And right now, we are going to experience one of the greatest vertical bull markets we have ever seen in history. And then the market, which is via inflation and so on and so forth, we are going to see one of the craziest booms in history. Then guess what? At the top of that, at the top, which, you know, if you know anything about trading, you can actually, I did a private session for my private coaching clients, where I talked about all the biggest crashes in history, 87, 90, 1929, and so on and so forth, right? What happened in the 90s, from the 90s to, 1929, and so on and so forth, right? So anyway, so the roaring 20s and so on and so forth. But the thing is this, is that essentially what's happening, guys, is that there's so much liquidity and there's only 2 games in town right now and people are chasing this. Not only that, but we've got other countries like Europe where there is floods of money coming towards the stock market right now, and the US stock market. People are just flooding it. So if you are trying to understand what is happening with these markets, this is the big macro of why the stock market refuses right now to even have a good 10% pullback in the markets. I was wondering, okay, maybe this time when we get a pullback, we're going to see a big, maybe a 10% pullback and not a 5% pullback. And then suddenly here we are a week later, almost at all-time new highs. So this right now, guys, to me, is getting towards the start of what I believe is one of the craziest vertical moves in the bull market. And we're not going to go up every single day, but that whole Santa Claus rally that normally comes, in December, is probably already started coming into November and December. Now, I'm not telling you to jump into the markets. I'm actually in the S&P 500, but I got in way back here, early in the year. And secondly, I added on this dip. So the worst thing to do is you never buy on a rip, you buy on the dip, right? And so that's basically what I did. And I still see a lot more upside to come. So please, traders, that's a big view about these markets, and these are the things that are pushing these markets around. And until one of these variables start to stop, and the 2 big variables, what is tapering, which probably won't do much, as in they're slow down their bond purchases. But then secondly, the big one you want, and the other big one you want to watch is mainly the interest rates. When they will start to slowly increase interest rates to try to calm this market down when things are just going too crazy. The Fed is going to let this thing go nuts. Inflation and the markets are all going to go nuts. And then guess what? The Fed is going to try to come to rescue. The thing about the Fed, guys, if you look back over history, is they always react to late data. That's the reason why they're always trying to calm things down. If you look at the 1970s, when we had this massive inflation period in the 1970s, guess what? They waited for the thing to get out of control. Then they started to raise interest rates and do all this sort of stuff. And then they started putting temporary pauses on on services and good prices, and to try to calm down inflation. Right? They reacted after the market had done such an incredible move. Inflation right now is big, and it's not too much, but you watch. This is not transitory. This is going to get a lot worse, and also we're going to see one of the greatest booms in history. And maybe, just maybe, this is going to last for another good couple of years. I don't know, but the big fundamental reasons of why this is happening right now, and this is, most people don't see this, and they're going to get what I call completely wiped out. Traders, I want to invite you to my webinar that I'm running today. And on this webinar, I'm going to share with you all the details to my #1 trading system for the last 17 years and how I only trade 1 hour per day. Plus, also going to be learning the 3 secrets that I had to master over the last 17 years to generate a really good income. If you go to Johns johnsfreetraining.com, or there should be a link in the description. Click on that. Go over there right now, register. If you are struggling with the trading right now, I promise you this is going to completely game change, because you're going to understand why you are going backwards and why you're losing money. And then I'm going to teach you exactly what the system I use that gets me a really high % win-loss ratio. So this is what I want you to do right now. Go to johnsfreetraining.com. Go over there, register for my webinar right now today, because you're going to absolutely love it. Or there should be a link in the description. And I look forward to seeing you on the webinar. So go to that right now, and I look forward to seeing you on my next webinar. Go to that right now. Go to johnsfreetraining.com. Go to that right now.